Now let's look at the rapid fire strategy to go long. So the first step in doing this is look for the SMA for the market price. Look for the market price to go above SMA, which is the moving average, smooth moving average. I will show you where that is. So this is the chart, and you can go to indicators and type in SMA, and this is the smooth moving average. And then the next step is, and then look for the parabolic SAR to go above the market price. So you want the market price to go above SMA and the parabolic SAR to go above the market price. So that means the market price is going to be in the middle. The parabolic is going to be higher. So let's look at an example here. The other one is parabolic SAR. I have that on, and I have SA, so close that. So I've got two. The parabolic SAR are the dots, and the SMA is the line, the smooth line. So I want the SMA to be lower, and I want the parabolic to be higher. So here we can see, if I put a over here, we can see somewhere around here, we can see it's a small one, but the SMA is lower and the parabolic is higher. So there is an indication that the price will go up. So at this time you want to go long, and which happened here. Similar to that, we can see it's also a small one, it's not a big one, but we can see that the parabolic SAR is higher and the SMA is lower, so you want to go short, and that's the opposite of it. If I look at another example, now if there's an instance where the SMA is higher and the price is lower, that's not in the rapid fire strategy, so we don't use that there. It's only when we see that the SMA is lower. So here we can see another example. The SMA is lower right here, all along this line, but when the parabolic SAR is higher, we want to go long, and this is exactly what happened. It went up, and then here, okay, here it doesn't work because the price is lower and the line is in the middle, so this doesn't work in the rapid fire strategy. If I look at another example here, so we want the price, the SMA, we want the market price to be in the middle. Here they're both on the other side, so this is not going to work here. If I take a different pair, okay, so here I'm looking for the price to be in the middle, and I'm looking at this one here, and it looks like a little bit like a rapid fire strategy here, because the price is lower, I mean SAR is lower, the price is in the middle, and the parabolic dots are here. So here you want to go long because it shifts and it goes upwards, and that's another example. So we've covered the rapid fire strategy to go short is exactly the opposite of look for market price to go lower than SMA, then look for the parabolic SR to go lower than market. Right, so it's exactly the opposite of the long. So here you want to go up market price to go higher than SMA, and here you want the market price to go lower than SMA. Here the parabolic SAR to go above the market price. Here's a lower than market price. So it is not uncommon to encounter a consecutive trading signals one after another, simply because of the low time frame used in the rapid fire strategy. As a scalper, you have to decide how you want to manage your trades, especially when the setup is fast and you want to react fast, and the exit and entry strategy is very simple. Now, just to remember that this rapid fire strategy works best in the trending environment, and it requires fast thinking and fast reaction time.